really get and understand the dynamics of what's really happening with the sector as well as the company. We have with us Umesh Chowdhary, the VC and MD at Titagarh Rail Systems, joining in on the show right now. Umesh, great to have you today on ET Now Morning. Firstly, I wanted to highlight a little bit about what we've seen in the first quarter from you at Titagarh, because your margins did increase. We've seen higher share of private sector wagons as well. But tell me, what could be the share going forward, and where do you see your margins trending, say, for the full year?
So, good morning. Thank you for having me with you. As far as our share of the private sector wagon business is concerned, we pretty much are leaders in that as well in terms of our order book. We have the largest order book in the private sector wagon space as well. So, we kind of balance the mix of the supplies between the railways and the private sector, because railways are more long-term customer, much larger customer. Private sector, while they give us better margins, they are more, smaller contracts and not a very stable kind of contract inflow is there. So it depends upon the industry cycle. So we continue to balance both the private sector and the railway wagon supplies on a quarter by quarter basis. As far as the margins of this business is concerned, we've always maintained that this is a 10% EBITDA business on a sustainable level. So while some quarters, can be better and some quarters can be not so good, but 10-11% is what we are expecting as a sustainable margin over, let's say, 8 to 12 quarters. I'm not talking about a quarter-to-quarter basis, but 8 to 12 quarters.
So, what we understand is that you're already clocking about 650 to 700 wagons a month, and you have a target to produce even 1,000 by the month end of FY24. Are you on track for this target?
Absolutely. We are very much on track for this target, and we are doing now about, as you said, 650 to 700, and this financial year we are targeting to touch the 1,000, magical 1,000.
You are looking at increasing your capacity, which you've already done. Can I assume that in the near term, your return ratio, especially a number which I look at, markets always look at, ROCE, it will also remain depressed? Because you are in the middle of
So as far as our ROCE is concerned, if you look at the ROCE of the company over the last 5 years, we have really quite substantially. And the incremental capex that we are incurring in order to increase capacity is not, an equal proportion. It is lesser than what the growth of the business would be. So going forward, we would only expect an improvement on ROCE, not a depression on ROCE.
And given that you ended FY24 Q1 with an order book of about 27,900 odd crores, you had the Surat Metro rail order, you had orders from the private sector. What are some of the other orders in the pipeline, and what's your targeted order book?
So the tailwind in the industry, thanks to the Aatmanirbhar Bharat policy of the Prime Minister, the Make in India policy, and the overall infrastructure that is getting created in this country, I think this is the time for India, and we are just riding that wave. So in terms of the other orders, I think we would only like to speak about it when they kind of get concluded. So we will definitely come back and announce them. But nothing at this point of time that we can announce. But all I can say is that thanks to the infrastructure thrust that the government and the Prime Minister has given, and particularly I'm a firm believer that the Aatmanirbhar Bharat policy and the Make in India policy are the biggest game changers for Indian manufacturing industry post-independence. So, these are the policies that have given companies like ourselves, like Titagarh, an opportunity to grow up in scale and size and actually look at becoming global, which is going to be our target going forward.
I want to look at your stock price, sir. I just want to look at it. Why? Because it's just mesmerizing the way stock's gone. I've seen multi-baggers in my past, but Titagarh is up in last 52 weeks. 140 has become 800.
The last 6 months, it's been up like 200% almost.
And let's look at the stock here. we look at the 5-year chart here. For the first 4 years, the stock in a sense was flat, but in last 1 year, it's really the whole idea which markets are excited about: defense, railways, Vande Bharat, new businesses, new wagons, modernization of railways, strong government capex towards railways. It took 2 years for markets to realize that railway is going to be the high growth multiplier for the economy. And look at the stock now. Between 2019 to 2020, it actually did nothing big. But the incremental gains actually have just come after that, and that's been magical. Do you feel happy when you see a stock go up like this? Or it's like, okay, I don't care, doesn't matter to me. We are not looking at raising capital.
I would be honest. It does give us a lot of sense of gratitude that the market and the investors have kind of kept their faith in us, but also it gives us a huge sense of responsibility. But you know what I would also like to add is that I've always maintained that our sector is like the last mile sector. So the railways in the last 9 years, particularly under the Modi government, has done a lot to build up on infrastructure, and that is in fact equivalent to creating capacity. If you look at railway as an industry, by building infrastructure, by investing on track, on signaling, on locomotives, they've created capacity. And in order to utilize capacity, they need rolling stock. So we are at the last end of the spectrum, and that's what is coming. In terms of the company itself, March 22, we had announced an order book of about 1,500 crores, and March 23, as you just mentioned, June 23, we announced an order book of about 29,000 crores. So from 1,500 to 29,000 is definitely a big change in the overall dimension of the company. And definitely, in terms of how the market has kind of reacted to that, and the movement in the share pricing, and also the government, because they have kind of depended upon us. They've trusted us in giving us the opportunity to be a part of reconstructing the Indian infrastructure. So that gives us great humility, but great responsibility and satisfaction.
As the trials for the traction motor supply gets the clearance, this is going to be a new revenue stream for the company. Approximately what kind of revenue are you looking to garner from this? And can you tell us what we can expect?
Sure. So the propulsion and the traction motor business is going to be actually a very key part of our strategy because of two reasons. One is that it is going to be a backward integration to our passenger rail systems business. So as Titagarh Rail Systems is now structured, we have the freight rail systems and the passenger rail systems, and keeping the rail system, the rolling stock, at the central point, as the central point of our strategy. We are actually
Right. Right. Mr. Chowdhary, I'm afraid I'm going to have to let you go there. Appreciate you taking the time, genuinely. Thanks so much for joining in, but let's cut across